Hey guys, this is Mark Coe for September 22nd, end of the week, Friday here, just about the end of the month, end of the quarter, and pretty tame week in terms of ranges, but I wanted to go ahead and take a look at some of the opportunities we saw today. So I'm going to start out with pound dollar. So we had Prime Minister May speaking this morning, so the market was a bit watching what the comments would be, but no real surprise to my viewers or my listeners. And just so you guys know, we do have an open house all next week, Monday through Friday. We would love for you to join us. So anybody that's watched the videos and enjoys seeing the levels and the work, please come on in. Totally free. You can join us all week, open house. But let's get down to the levels today and what my viewers knew ahead of time. So we knew, as for a number of days, we've been focusing on this 35.95 area. That has been our resistance for a couple days now. And you can see how it's played out. And I'm just going to grab 35.95. So that's it right there. We've obviously had a few moments of trade above it, but nothing establishing. And we were using it once again tonight, or I guess today, Friday. The high on the day is 35.96, which is beautiful. We were actually short the model. So we'll see how that plays out. That's a longer term trade, but just from a day standpoint, here's what we had. We had resistance, we had support. You can see where the support's coming from, and I'll talk more about the levels and how I'm finding the levels next week. But the idea of knowing that on an approach down into 3,500, what you're going to start to see, the same buyers that were there, or at least to be on the lookout for them. So it played out fairly well. Pound dollar rallied off those 35s, and I don't know where we'll close. We're still 4 or 5 hours away from the close, so we'll see where they close them. But again, highlighted area, sell side focus on for a day trade. It made a lot of sense. Dollar yen. So let's look at some of the levels we've been looking at in dollar yen, and we'll bring into focus the movement we saw last night. So again, this has kind of been a pattern over the last several weeks, and probably even into early August, where you see news out of North Korea, and that's all it was last night, was a bit of reaction. So what were we focused on in dollar yen? Well, top edge resistance was 112.70, and again, that resistance was coming from earlier in the week. But here's your 112.70. Never seriously challenged it. And again, I always like to look at what do the charts look like when this analysis is created. And that's what they look like. So what was I using support-wise? Support-wise, I'm using 112, and which wasn't massive. It was just the figure here, but the more important one being the 111.70, simply because that contained all these tops in here. So that we knew right away that we had to be focused on that area. So we get the lows overnight on that Korea headline at 111.65. So that comes during kind of mid-Asian trading. And you see, again, what the reaction. So the whole way to use these levels is, what is the market telling you from reaction? So if you walk in and you say, okay, that's fine, you have your resistance here and your support here. Well, tell me, what was the market's reaction at resistance? Did it challenge it? No, it didn't challenge it. All right, we're likely to head lower. When we break out of consolidation, which way do we break? We're breaking lower. All right, so fine. I know I'm not a buyer right here. But now you're at my support level. All right, so I'm in a market that's been bid. All right, I get it. It's been bid. But now we're at a support level. What do? I mean, there was a support level at 112 that wasn't as meaningful, but it reacted at the 112. It only reacted 15 points, but it reacted. Now what's the opportunity here? On very large sell movement, right? 112.55 down to 1, so almost a big figure. What's the reaction? The sellers and the buyers working together, right? They're both acting. What do they tell you about that level? Right? And so if you're just being objective and you're saying, okay, well, what does the market tell you? Forget this guy talking. What does the market tell you about that level? Is the market telling you that it wants to push it lower? Well, you don't know on the first tick, but you start to see it 30 minutes, an hour and a half. Look, if the market wants to take it lower, it's got to do it. But short of that happening, the way you play it with outsized reward versus your risk is to lean against that level. And the market holds it and rotates, and you get a movement. Again, not massive, but you're getting movement back up at least to the last challenge area. And that's a lot of the way we're looking at it, which is level to level, right? So to close out a week where it's not been overly volatile, let's say that it hasn't been overly volatile. We've seen some very good movement over the spring and summer in currencies. We've seen a lot more range-bound movement the last several days. Crude oil has hardly moved. I mentioned earlier in the week we hadn't had one 4-hour close outside of 50. Here's what I was marking. Here, let me put it on a 4-hour just so you guys can see it. 4-hour close outside of 50, 50, or 50 the figure. That 50 cents had contained every close. And that was up to Wednesday. So it was Thursday, Friday, Monday, Tuesday. So it was almost 5 days at the point where I was talking about it. And you get an idea of how tight that market really was. Crude oil, a market that can move in any given day a couple bucks. To be trapped for 5 days inside of basically 50 cents, it's pretty tight. There you go. There's your 4-hour, right? And so here's what I was looking at. Now again, I'm looking at closes and 50-50. So look how tight it was with the closes. There's your 50-50. Okay, so you got one close out of it. That was the day I wrote it. You got a second close out of it. And I'm just talking about the closes. If you're looking at the outside ranges, obviously those are very well contained this week. You would just extend them slightly. And again, I'm matching these former highs. So that was your overall range. I was looking at the closes. The closes made it a lot tighter. So you see what's going on. But here's what you know about these edges. They've contained it. Now when you go take those same edges and you put them down on something that a lot of us are very familiar with, shorter term trading, intraday, and you're just looking to deal at those edges, knowing its top edge or its bottom edge, that same logic I just used in dollar yen, meaning use that support to lean against it. Well, look what you get in crude oil on a week that doesn't look like it did anything, right? Just a week that doesn't look like it did anything. Marking your last Thursday, September 14th resistance that brings the market lower. Just marking that, right? Marking your support down in here that drove you higher, right? That's all you're marking. Your outer edges, support, resistance. You can't trade it here based on this. You can only trade it here based on this, right? So it's somewhere it has to give you the level. So it's dealable here. That's 50.85 to 49.80. That's $1.05. This is dealable here, 49.85 to 50.80, right? That's $1 down, $1 up. That's $2. Same deal. It's dealable here, short side, $3, $4. So in a market that doesn't look like it's giving a whole lot of opportunity, it's giving you one rotation, 2, 3, 4. This one's not going to get a full rotation lower. You're now pressing up against the same top edge. But my point being is that if you will mark the levels and show the significance of the levels, you'll look at it a lot more objectively. So anyway, I hope you guys join us next week. It would be great to have you in the room. And I hope everybody has a fantastic weekend. So for September 22nd, it's Mark Coe. Cheers.